Hi and welcome to Funding Juicy Solutions, where I talk about mortgage tips and strategies. Today I want to talk about how interest rates impact your borrow amount on your loan. Last week, Monday, I gave an update on where interest rates were at. Fast forward to the end of the week where we had a rate hike and interest rates bumped up about 0.5% in one day. Today is June 14th, 2022. And as things, you can still get VA loans in the 4%, high 4%, but it's heading into the 5s. That's about the best rate you can get out there. Other loans, conventional, are already in 5 and 6s and heading towards 7, and non-qualified mortgages are heading towards the above 7s. So you can check out last week's blog if you want to see an update on interest rates as of last Monday. But today I want to talk about what happens as interest rates go up compared to loan borrow amounts. So first thing, I put in a $350,000 loan amount that we're going to borrow off of at 4%. And that would give you, with property taxes, about $200 a month and home insurance estimated at $200 a month. That would give you about a $2,240 mortgage payment. So I want to bump it up to 5% and see what happens. So bumping up a $350,000 loan to 5% roughly gives you a mortgage payment of $2,450 per month. That's roughly a $210 increase per month mortgage payment on a $350,000 loan. Let's bump it up to 6. So at 6%, that same amount is about $2,670, and that's an increase in your monthly mortgage payment by about $430. 7% would put your mortgage payment about $2,900 a month, and that's a difference of about $660. Now, if you're at 7% and you wanted to have the same mortgage payment on a $350,000 loan as you had when you were at 4%, you would only be able to borrow $250,000. So keep that in mind. At this level, if you're gonna let rates increase from 4 to 7, either you're gonna have to build enough equity in your home to pull that out to buy a new home, to where you only need to borrow $100,000 less, or the housing market would have to drop $100,000 at that house level in order to equate to the same level home that you wanted to buy previously. So I bumped up the loan amount to $600,000 and put the interest rate back down to 4 as just a starting point, and we're going to walk through the same progression. At a $600,000 loan at 4%, you're going to be paying $3,440 a month if your property taxes are at $200 a month and your insurance is at $200 a month. That's $3,440 for all principal, interest, taxes, and insurance. I bumped the interest rate up to 5%, and that gives you about $3,800 a month in your PITI, which is about a $360 increase per month. So I bumped the interest rate up to 6%, and now we're at $4,170, which is a difference of $730. Let's see what happens at 7. So at 7% on a $600,000 loan, that puts us at a monthly mortgage of roughly $4,560 per month. That is an increase of $1,120 per month, going from 4% up to 7. So you can see 1% a little bit at a time increases quite a bit. So at 7%, I lowered the purchase price of that loan down to where we can get a $3,440 payment again, monthly payment. And you would have to go from a $600,000 loan down to $430,000. If you want to pull the trigger on buying a home later, when the housing market levels off or even crashes or dips, whatever you want to call it, you would have to, the house that you're looking for at a $600,000 price point now would have to drop $170,000 to get your same mortgage payment now if the interest rates were to rise just 3% in that time period. Keep in mind, no one has a crystal ball, and your investments are going to be up to you and your wise decisions. I'm just hoping this information helps you make a decision on, should we wait? Should we buy now? Is it worth paying extra to get in now? Are things going to drop down in pricing where it'll beat out the interest rate. Those are things you want to consider and make a decision on. Remember, whatever your situation, there's a juicy solution waiting for you. Give me a call. I'd be more than happy to talk with you, look at your finances, and see where you need to be in order to get into home.